So I'll just introduce myself to those of you that may not know. I'm Ingrid Jarrett, President and CEO of the BC Hotel Association. It is my pleasure today to be co-hosting this webinar with Abe Tai, who is our partner with O'Connor Property Tax Reduction Experts. We have a great relationship with Abe, and we're really excited about the approach that O'Connor can provide you. We also have Randy York, who is with the O'Connor team, and Randy will be a direct contact for those of you that are hotels that would like an analysis done on your assessment, your property tax bill, and then how it was actually evaluated. So a little bit of housekeeping first. This webinar is being recorded. It will be made available after the webinar today. We will have about 15 minutes at the end for Q&A. And so I'm going to ask all of you, you'll see the Q&A at the bottom of your screen. And I would request that you put any questions that you have in there. And then we will do our best to answer. Questions that we're not able to answer, we certainly can follow up with that information through Abe and Randy providing after the webinar, and can send it out to all of you that have registered today. Today's webinar is proudly brought to you by Fortis. Fortis is a significant sponsor and partner for us. They really assist with the sustainability work that we do. And I just want to take a moment to acknowledge their support. We couldn't do this without them. And so Vlad and your team and Fortis, thank you ever so much for being such a great partner for us. I'd also like to acknowledge that we have today both BC and Alberta hotels. My counterpart Tracy and I really find that there's a lot of ownership groups and brands and management companies that are in both Alberta and BC. And Abe and Randy and their teams are experts in both provinces, across Canada, actually in North America. But we've decided that today's webinar would be beneficial to have ownership groups and management companies and hoteliers from both provinces. So just tip my hat to our partners at the Alberta Hotel and Lodging Association. And now I'd like to take a moment to pay our respects. And I would ask each of you on the call today to acknowledge the land in which you are currently. I'm in the spirit of truth and reconciliation. We'd like to acknowledge that this meeting is happening on the unceded traditional territory of the Musqueam, Squamish, and Tsleil-Waututh nations. We thank them and are deeply grateful for us allowing to live, work, and play on their traditional and ancestral territories. As I introduced myself earlier as the host, I'm Ingrid, and I'd like to introduce to you Abe Tai, who is the Director of National Commercial Property Tax with O'Connor and Associates, and also Randy York. Today's agenda, we will, number one, proven methods to assess and reduce your property tax. Our second agenda item is insights into the common assessment errors that could be costing you. So that will be actually having more tax than you need to pay and how to identify those. And then the third agenda item are tips for navigating the appeals process with confidence. So without further ado, Abe, I think you have these slides, and so I invite you to share your screen.
Sure.
And we will take it away with your O'Connor slides. Thank you so much.
Before I share my screen, and just want to say thank you, Ingrid, and thank you, Gareth, and Alberta Hotel Lodging Association, and for making this possible, and also Fortis, thank you for your sponsorship. We're privileged to bring our program forth to British Columbia and Alberta. Something very special that we're going to share with you today that will really make a significant impact into reducing your operating costs. And you can see in these environments that we live in today, especially after COVID, all of your operating costs is going up, and everybody that's in the industry can relate to it. Labor, insurance, cost of goods, dealing with the inflation, especially your interest rates and so on. But I can tell you that since property tax is one of the largest single payment that you make to operate your property to the local government, it is the only item that you have control of. Other items, I hope you agree with me, is really out of your hands. When the insurance company dictates a rate, you either have to take it or you have to tell your lenders that, hey, it's mandated and no matter what, you have to pay it. Labor, same thing. So that's what we're going to focus on today. And I brought Randy York, our O'Connor special consultant for Canada, and I want to introduce Randy to all of you here. Randy?
Hi, everyone. Yes, as Abe said, my name is Randy York. I'm the agent that will be handling our Canadian hotel accounts and appeals. And as Abe said, we really appreciate getting to be here today and talk to you about our services, and we look forward to representing you.
Wonderful. So if you have any needs, besides contacting me directly, Randy is also here for you. And we work very differently on a level where our service is very personalized and we pay attention to details. So that's why Randy and I work together in providing better service to all of you. And let me just go ahead and share the slide here and share. Okay, so let me know, Ingrid, can you see the slide here?
Yes.
Okay, very well. Let's get going. So the company, O'Connor and Associates, we've been around, this is our 51st anniversary year, and we're glad that we have consistently assisting clients throughout the United States and Canada in significantly reducing their property tax liabilities. And as you can see here, we participate in quite a few hotel associations and also franchise organizations. So a little bit about us and who we are. The company for the past 50 years continually growing. We have over 1,000 professionals that supports our business. And now, after 2024 ends, we're really pushing to more than 400,000 properties now under representation in North America. But what's special about O'Connor and what we do and what Randy does is we specialize in hotel property tax appeals. And this is something that I look forward to really share with you about all the details as to why our special method that we have developed is very different than what you've seen anywhere else. Next is that we have our website that you can visit, nationalpropertytax.com. Call our helpline if you need to talk to us anytime. And we also have our office in Toronto on Bay Street. Our headquarters is out of Houston, Texas, but we have offices throughout North America, and the Canadian office is in Toronto. About the 1,000 professionals, what really sets us apart is that we have 500 data analysts full-time that works for us and with us daily. The difference is that in the tax appeals, you need data. You need to constantly update the assessor's data, because when the assessor goes settle a case with your peers or your competitor, they will input the settlement into the tax roll system. But dealing with a firm that doesn't have our capabilities or resources, that new data, the new low value is very difficult to find. So that's what we do to start with is very different. So like I've said before we started this webinar, all of these costs is mentioned here, labor, insurance, interest rate, not controllable. Sometimes in places that I represent, properties, the insurance double and triple within the last couple of years. Interest rate with LSA, it went up. And hopefully when the economic climate changes, it will go down. Your labor costs still continuously going up and shortage of labor. So property tax, out of these major cost items, it's the only one that in my opinion, that you can control. And here's how you go about doing it. We're here to help you. The reason why we're in the Canadian market is that there are very few tax firms or tax consultants that specializes in hotel property tax, because hotel is a very special asset type. You have to know this. The tax assessor can only tax you on something you can touch and feel, which means building, land, and fixture, furniture, equipment. But hotel is a special class of assets. You have a business in there. Without that business, you could make your revenue. You could make the hotel work. So that part of it is something that you cannot touch and feel, but it brings you a lot of benefits, revenues, franchise, ongoing concerns, goodwills. And that's a part that's not taxable. What makes hotel property tax challenging, and also in Canada, is that the intangibles now are being taxed by the tax assessors, even though they have a modeling saying that they will recognize the intangibles. However, when we look at all the case studies we had, it's not enough. So the key to a successful tax appeal, the reason is your tax assessor does not know your revenue. They don't know your exact expense. They don't know the details as how your property condition is and how your ADR and RevPAR is trending year to year. Even though they have general studies, but they really don't know the inside of it. This is why I'm saying that you need to file an appeal regardless, because when you do, you will discover a lot of mistakes that the assessor makes. But what does it take to make a successful appeal? Number one is the experienced tax consultant. You must engage an experienced tax consultant that specializes in your property type and also are very familiar with the local regulations and the steps to properly file appeal. In addition, when you go to the equalization board or you go to the assessor's hearings at their office, they're not always fair to you. Sometimes they're biased, and we run into that all the time. So if we can derive in a fair value that's close to our target value on our analysis for your property, then we will go ahead and engage an attorney on your behalf to further push the case to the tax court of Canada and to get a fair representation of the valuation for you. At the end, regardless, most likely you'll win. When you do that, you get tax refunds. So next thing is, ask yourself, when was the last time, number one, your tax consultant voluntarily come to you to compare results? How do you know your value is low enough? How do you know you're being equally treated by the tax assessor? You don't know unless you compare results. Number two, when was the last time you received a tax refund check from your property tax payments? So ask yourself these two questions. If you have not, you definitely need to look into an expert to represent you. Three is, when you want to do a successful appeal, you must have a real estate appraiser. O'Connor, since we have vast resource and finance behind us, all the cases we do will have appraisal that goes with it. We just don't use any appraiser to appraise your property, just a certified appraiser, but we use the service of a master appraiser by the Canadian Appraisal Institute to sign that appraisal report, so it will be more substantial and meaningful to the people that's reviewing the report for you. And also we have the massive data resource. Pretty much we vetted all the hotels in Canada. We have a master list, and especially in BC and Alberta, we can tell how the results shows. Either you're high or you're low, because we have value per room data for all hotels in your province, and we're continually updating that data as the appeal concludes for each property. So reducing your property tax, in my opinion, is the fastest way to boost your bottom line significantly. Think about this. People are buying your hotel in the market in general, 10% cap rate. Just think about it. Every dollar that you can save as an owner on property tax equals $10 more on the resale value or the asset value of your hotel. So the savings produces not only the actual dollar savings on reducing costs, but it will also significantly increase the market value of your hotel. So understanding the difference between total market value and the taxable market value is something that hoteliers often get confused on. And this is something that Randy, same thing when we travel throughout North America. And the hotel owners typically approach us this way. I just paid $10 million for my hotel. And the assessment, it's 11 million, so we're good. It's low enough. But our typical response is that, well, your purchase comes with a business. And you and I both know in the industry is that your brand and your goodwill and your franchise association is a significant part of the total valuation of how much your hotel is really worth on the market. Remember, I just said that the tax assessor only can tax you based on what you can feel and touch? Real estate, right? Property tax, building, land, FF&E. So when you pay 10 million and you exclude the non-taxable intangible business value, the correct taxable value should be much lower than what you predicted. So if they tax you more, then you definitely challenge, but if they tax you less than what you pay, it's still not low enough due to the fact that the business values involved and need to be removed below your purchase price significantly. So this is what I'm talking about. Intangibles, it's exempt from property tax, ad valorem tax, both in US and Canada. And it's significant. If you have never heard of this before, you really need to pay attention to engage an expert filing the appeal coming up this year. What considers to be intangible value that is not taxable? We're looking at franchise, licensing. If you have that, you qualify. Permits to operate your hotel. Of course you have it. Goodwill, repeat customer, name recognition in the community, brand recognition as a franchise. That all considered to be goodwill. Also, goodwill from the employees and the community. Patent, trademark, and copyright. And if you have a DBA, you definitely qualify. But if you have a logo and you have anything that's very specific to your operations and your brand or your business, that definitely can be carved out from the total taxable value, and you can save significant amount of property tax for your hotel. Contract, of course, everybody have it. Contract with your vendors, with employees, with the government, anybody, franchise, associations, so on and so forth. Those are all part of our formula to remove from the total taxable value. So what we've done is we spent significant amount of time and resources. This is started about 8 or 10 years ago, where we start applying the correct tax code in challenging tax assessors everywhere. And we did a lot of research because we have over 1,000 people that help us. And and we have data on every hotel in Canada and in the US. And we also collect data on the ADRs and RevPARs, franchise fees, and also independent hotel rental rates, ADRs and RevPAR to do this, but that data has to be updated constantly to validate our appeal. And so it is a huge undertaking in a way, but when we have that data, the result is we can successfully create the O'Connor approach, a formula to demonstrate to your tax assessor, your value equalization board, and also in court or arbitration or mediation. And that's what's significant that we bring to the table for you that can be a huge benefit in reducing your bottom line. And here is a model of how significant the savings can be. If you look at this model, there are two columns. On the left is the O'Connor approach that we created. It's copyrighted, trademarked, and protected. No one else can use it. And the tax assessor's approach. So let's, for instance, this hotel, $5 million revenue. And with O'Connor approach, we will adequately demonstrate and calculate and prove that 9.33% or in that range of your revenue, all of the 5 million that is not subject to tax. So when we apply our methodology, the net operating income is very different. And if you look at the expense on both sides, same expense, about 70%, 3.5 million. But if you do the tax assessor's way, 5 million minus 3.5 million, the net operating income, beginning the calculation, divided by cap rate is 1,500,000. And in the O'Connor approach, we can show the court and the board that the correct net operating income to calculate your tax is $1,033,500. Significant difference using the same cap rate on both sides. And the market value is 18.75 million on the assessor side. That's how they're going to notice you. And we will have a target value before the intangible deduction that the assessor offers for the FF&E, 12.92 million. You see the significant difference here. The assessor do give consideration because without the fixture and furniture equipment, you cannot make your revenue. Therefore, they give all the hotels in BC and Alberta a 15% below the total calculation discount to recognize the fact that that value should be removed for the fixture and furniture equipment. So after deduction, your taxable value, the assessor will challenge you and say 15.94 million. But when O'Connor representing you and using our specialized approach, we will have a target value set for 10.98 million. The difference is 4.9 million in taxable value. And if your tax rate is 2.5%, your assessment ratio, it's at the taxable value at 12.92 minus the FF&E net 10.98 million. You are targeted to pay 247,000 of property tax versus the assessor's rate 358,000. So the savings is significant. It is about 31%, 111,000 in Canadian dollars that you can save by simply engaging us to help you. Here's some of the samples of refunds. We went through the core system in the US, some very difficult states. Utah, we won the landmark case, trial by 2 judges. And one hotel alone for one tax year, $24,000 refund. In Worcester, Massachusetts, so that is Boston area, I think that's a Homewood suite, 248,000 single tax year refund. In New York, Nyack, Times Nyack Hotels Independent, 435,000 refund. And in Saline County, that's outside of Little Rock, Arkansas, very difficult. We cut the value to half and produce a refund check for our client in the range of 143,000 US. So with all this said, all I'm encouraging you to do is pay attention to your value notices and the appeal deadlines, because once you miss the appeal deadline, you do not have another way to go back in and challenge the appeal. And so the deadline is significant for British Columbia, January 31st, coming up in about 10 days. Take advantage of it. Come to us, let us do a free analysis for you to show you by using our approach how much more tax savings we can produce for you. Ontario is March 31st, even though the Ontario market, the province, have not reassessed property value since 2016. But if something catastrophic happened or your revenue drops significantly, you still have an opportunity to file your appeal. And also, by applying our approach in Ontario province, the valuation is significantly different, as you can see. Alberta, the notice will be mailed out in January. Deadline is projected to be in March. If you need this help, please contact Randy and myself to do a free analysis for you. And another thing that sets O'Connor apart is that we never charge you a dime unless we produce a savings for you. And this is our gold standard program. There's absolutely no upfront fee to help you appeal your property tax for your hotels. And if there's no reduction, even though we engage an appraiser, we have the data, we spend a significant amount of resources on each case. If we can produce the savings, no charge. And so you have nothing to lose but filing an appeal. And help yourself out and really help yourself not only reducing your overall operating costs, but help yourself increase the value of your asset. Just in case you want to resell it or go refinance it or give a statement to your bank to really kind of leverage your equity in the deal. So stay in touch with us, and we're here to help you. Come visit our website, and really, all we need is your profit and loss statement and a STAR report if you're franchised, and that's how simple it can be. So please help yourself out, and feel free to call us anytime. Thank you.
Thank you so much, Abe. During the year when I meet with hotels, or we're having our summit, or I have an owner forum, or we do our pulse check,
Yes.
one of the top things that comes back is the concern around the ever increasing cost of doing business.
Yes.
And so for those hotels that are online, I'll just let you know, our relationship with Abe started last year, and we were really excited, both federally and provincially, along with our counterparts in Alberta, to have a company with a proven method to support acknowledging that number one, you have to appeal, or you're just accepting that the bill goes up. And we have certain cases within British Columbia where, for example, a hotel would sell in a community, a few hundred kilometers or more away, and it actually is impacting what the perceived value of your own property is based on that market sale. Now, we know every jurisdiction, every community, the demands are different, the demand generators, the profitability, the rates, the length of stay, so many things within an operation we can control. But property tax assessment, unless we really take them to task and appeal, then we really don't have that opportunity to make a difference there. But we also know for owners and this is one of the number one things, insurance, property tax. That's what keeps them up at night. So that's certainly what this webinar is about. Now I see we have a question here in the chat. We've got a few. So let's start. David, thank you. This is a really good question. Abe, in British Columbia, we have a significant number of strata properties. They can be franchised, branded, or independent, and very often they have a different structure. So the question is, for strata hotels where each unit is owned by an individual, I imagine each owner would have to apply for this individually. Some owners own quite a few units, where some only own one. Can you just answer that, if that would be the case, or whether or not you can make an appeal for the ownership group?
Sure. Randy, join in anytime you like. And we had a similar situation in Hawaii, especially in Kauai, where we actually represented the Royal Sonesta there. And 300 plus units. It was purchased from Marriott. It was a Marriott that Royal Sonesta purchased, but it's a condo setup. And so each case had to be filed individually, and the filing fees involved there. So it becomes a significant task. But the previous consultant, our main competitor, did not file the appeal because the fee and the time it takes to file 300 plus appeals for the individual units. But that's during COVID period. They just flat out didn't do it. And we picked up the job, and we're the only company in Kauai that got a reduction for hotels in the past recent time. So that's not a challenge to us, as long as your profit and loss statement shows the general operation of the hotel side. So all the owners have to be involved, and all the appeals have to be filed at once. So proportionally, when the reduction comes, and it's billed to the property owner or the management company, so proportionally the tax will reduce for each unit. Randy, is that correct? Is that what your take too? You're on mute, Randy.
Oh, sorry. Yes, I agree
correct?
with what you said, yes.
Okay, so not a challenge to us, especially hotels that have retail components, stores, and things like that. We group all the different components together and make the whole property one economic unit. And also, in the past, when people go challenge a tax assessor, especially you have a parking lot off-site that serves that hotel, that you're paying for that piece of land, there's a separate property tax account that generates, you don't have that parking, you can't generate the revenue you generate. So what we do under the tax code is we will argue one economic unit. So we'll proportionally get the total value together and set aside the taxable value for that parking lot, but generally it's included in the income approach method. Instead of what the assessor's doing is by land valuation based on sales. So we can save you significant amount of dollar on that alone. And also Ingrid brought up a good point where the assessor used the market sales to increase the value every year. But just think about this. What does the assessor's market sale include? Includes the business. That's why they increase you significantly without removing that part of it. Okay, so when we go, not only we have data on all the sales, typically assessor pick the high sales. We go in with the low sales. Then we will do a reworkup on the assessor's sales comparable in removing the business value out of there. Now you can see when we go to core, when we go to equalization board may not understand that, but with that argument alone, just think how much mileage you can get out of that, just that one item.
Yeah.
Right?
Thank you, Abe.
Okay.
Okay, so we have another question here. Will the government retaliate if I protest my property taxes? I mean,
Well,
honestly, they can't really retaliate in any way other than, acknowledging. I mean, you have to do the work with the assessor to show them the value, and then it's actually a negotiation between yourselves as the property tax company
Right.
being hired by the property. But you know, the question is here, so you maybe answer whether or not you think
That's a great question. Randy, can you tell everybody how mass appraisal system works?
Yes, so this is a common misconception that we see a lot of times where property owners may think that it may impact them negatively, or as they stated here, the government or municipality may retaliate. But this is false. It is your right to protest your property value each year. And many assessors and appraisers actually encourage you to come forward and, you know, if you're unhappy with something or feel like they have overlooked any information, it's important for you to come forward to show them, you know, what you think your value may be worth. And that's also, you know, what we do is we help you look at the financials, look at sales, depreciation. We do everything we can to gather a case and see if there was a mistake made. So yeah, it's important to protest your property value, and it's your absolute right. And they will not retaliate at all. If anything, they encourage you to come forward.
All right, think about
Thank
this.
you, Randy.
The mass appraisal system, the tax assessor build a formula for the same class properties as yours. They input
Yeah,
that formula, push a button, there goes your notice value.
that's right.
And the notice value goes out, they don't know who's going to protest. But the sad thing is, in our data shows that only 15% of all property owners file a protest. And so the government don't know if you're going to protest or not. They couldn't retaliate from the get-go. But if you protest it, when you correct that valuation, just think about what happened next year when they pick up the case. Okay, even
Yeah,
though they don't change your formula, but when you go in or we go in and say, look, this is what happened last year. You gave us a huge adjustment because of our method. They're going to do the same again for you.
yeah,
A lot easier if you
yeah,
start the
right.
protest.
Okay, we have another question. Will filing an appeal to reduce the property taxes negatively affect me when I sell my hotel?
Well, that's a great question. Like I've mentioned before, every dollar that we can save you improves your net operating income. If you sell your hotel for 10 CAC, every dollar we save you will turn into $10 more in resale value.
Yeah, it's the opposite. It actually increases the value because
Yes,
your hotel is more profitable.
yes.
Yeah,
Hotel assessment valuation is not directly related to market value and resale value. Just keep that in mind.
yeah,
It's an expense item on your P&L, and you must comply to keep your property operating. So
yeah,
think like that. Yes.
great. Okay, here's another one, and I can probably answer this, but Abe and Randy, feel free to add. The question is, I represent a hotel within a national park. Property taxes are issued by the municipality. Is this any different to outside, for example, Calgary? And have you previously helped clients within a national park setting? I can tell you, all municipalities are who sets the property tax value. And so I don't know about, well, it says that it is issued by the municipality versus the national park assessment. Abe, have you worked within a national park setting before, and do you have any information there?
Right. Not a national park in particular, but in a special abatement area or exemption properties. So if you pay a tax, regardless what the tax amount is, but what sets that tax amount to start with is the market value. Just think like this, okay? At the beginning point is market value. So the higher the market value, the higher your tax, regardless what kind of benefit, exemption, abatement that you get from the government or the national park. So our job is to go in and suppress the market value, even though in your mind you say, oh, well, I got exemption, I pay a low tax, whatever situation it is. If you lose that, if they change the tax code or change one law, to take that away from you, if you don't keep your market value under control, then it will get out of hand really quick. So irregardless what type of exemption or special benefit you're getting being in a national park, our job is to suppress the market value, make sure it's controllable. So when surprise happens, you're not impacted significantly.
Yeah, I would imagine it's exactly the same as within a municipality without the
Exactly.
same process.
Exactly.
We have one more question here, Abe, and that is, Abe, you've shown us that an appeals process is very involved and it
Yes.
takes a lot of data and evidence. If someone wants to tackle this on their own, what's your advice?
Really, if you tackle this on your own, be clear and convincing. Gather your data and review your financials. Make sure if you do this on your own, the assessor look at your P&L. Typically, for equalization purposes, the assessor and us will not use property tax, depreciation, and mortgage payment as an expense because we have to treat everybody the same. So those three items have variances. So please start with that. And if you don't do that, you're not going to get anywhere from the get-go.
Yeah.
Secondly, you have to review your financials because getting the assessor's evidence before you go to hearing is important. You can see how they set up their modeling, what expense ratio they're using, what cap rate, but also remember, put reserves in as a part of your expense. Typical hoteliers don't do that, but you have a PIP coming or you have a remodeling to refresh to, have a change your soft goods or hard goods in a certain time. Be able to reserve into your expenses because every dollar you put in is $10 more on the reduction on the market value, and that saves you a significant amount of tax. So don't lose your cool. Don't walk into the hearing and say, I don't make any money. I lost money. How can you charge me so much? Don't do that. Be calm, collective, okay? Even though they don't give you a fair decision, you always can use the judicial appeal process to equalize the mistakes, or the valuation that they made.
Abe, I
Yes.
have to say it's a very generous and a very detailed answer.
Mhm.
I do know that we measure value in all of our time
Mhm.
as well as expertise.
Mhm.
And there's a lot of details. You can only appeal. I think you only appeal once every year. And so I would suggest that the understanding of the approach that O'Connor has for property tax appeal would be a great first step. And then if you have the time, capacity, and understand in the future to take it on yourself. But I also know, having managed hotels and, had a go with municipalities around the amount that my property tax has been assessed at. It's not for the faint of heart either. And so if you can find a partner that will support you and only a share of the savings be the fee that you pay, I think that's a pretty great
Yes.
win-win organized
Oh.
setup.
Yeah, it's definitely a win-win because our clients keep the majority of the tax savings we can produce, and we carry all the expenses.
Yeah.
Pay the lawyer, the appraiser, the data
Yeah.
analytics, and the consulting, and the travel. Don't forget that.
Yeah. Yeah, that's right. That's exactly right.
Yeah.
I'm not seeing any more questions.
Okay.
Gareth, thank you. I was just going to say, let's bring up that poll. So 64% are anticipating a property tax or have received a property tax increase this year. 36% are not sure. So the 36%, I encourage you to find out because your assessment and property tax in BC will have already been sent, and in Alberta you should receive it, as Abe was saying, I think by the end of the month. And then the second question, how do you anticipate your revenue will perform? Remain stable, 56% and 32% are saying increasing. This is a very positive reflection of how you're feeling about the market. And I'm always encouraged when we see that we think revenue will perform at or better than last year. Keeping in mind that if we had added a question, do you anticipate the cost of doing business will increase as well? I would anticipate that we would have the majority saying, yes, they believe their cost of doing business will go up. And certainly in our last pulse check, you know, those hard costs that are significant, like insurance, property tax, energy costs, labor costs, etc., all continue to go up. And when we analyze 2017 to 2024 in real-time data or real-time dollars with inflation taken into account, EBITDA has actually reduced, not gained. Even though revenue has increased, EBITDA has not. And that is one of the reasons why the Alberta Hotel and Lodging Association and the BC Hotel Association are working so hard on finding partners like O'Connor that can make a big difference to your bottom line. And so that being said, Gareth, I think we've got just a holding slide of how to get in touch with our partners at O'Connor and ourselves as well. I'd like to thank all of you for your time and your interest. If you have any questions or feedback, please reach out directly. I'm Ingrid at bcha.com. We have Randy's contact information here. And again, Samantha, which is the BCHA Member Support Services Inquiries. So that's all about members, should you not be a member, or anything about the other additional, especially the cost saving plans that we have for members. So I'd like to thank you very much again. We will be sharing this webinar. It will be on our website and we will distribute it in our newsletter as well. Abe and Randy, I look forward to seeing you in person at our conference, April 22nd, 23rd. And thank you so much for being such a great partner and making yourself available for today's webinar.
Absolutely. My pleasure. Thank you so much.
Thank you.
Thank you. Okay, take care. All the best.
All right. Take care.
Thank you.
Bye.